The founder of the RelayX wallet, Jack Liu, has been helping investors to deal with a crisis on a cryptocurrency exchange by using Bitcoin SV's ability to tokenize assets. The exchange, OKEx, recently suspended all withdrawals because, it explained, one of our private key holders is currently cooperating with a public security bureau. It hasn't said who or what this is all about, although it's assured users that their money is safe. I talked to Jack Liu about his innovative solution and what it says about the potential for tokenization on BSV.
You're listening to CoinGeek with Charles Miller.
So Jack, thanks very much for doing this. And we're going to be talking about tokens today, but we're going to start with a very specific situation that is going on at OKEx that you've got some news and some views about. So can you just tell me, for those who haven't been following, what's been going wrong at OKEx in the last week?
Well, I think there's an acute situation developing at OKEx since I think the 16th of October. And it's a case where this is one of the major exchanges in the world. By asset holdings, OKEx as a cryptocurrency exchange likely holds somewhere between $2 to $4 billion of crypto assets of users. I actually formerly was a chief strategy officer of OKEx and a shareholder of the company from back in the 2014 to 2017 period. But the exchange has a situation where they have suspended withdrawals, but kept every part of the operations continuing. So you can actually still deposit funds into OKEx, you can still trade, you can still transfer funds internally between users, but you just cannot withdraw the cryptocurrency coins. I don't have any information in terms of why, other than what's been posted publicly by the official OKEx press release, but it appears to be a situation where some of the key signers for processing withdrawals are not available right now, as they are dealing with an investigation or a private matter with the Chinese authorities.
Yeah, I mean, they've named it as just one individual, although they haven't given that person's name. It does seem very strange to me that the whole thing can depend on one individual being able to be there and type something into a computer. I mean, he might have fallen under a bus, or the whole thing seems very fragile if that's what's happened.
Yeah, well, we don't know exactly. That's what a lot of people are guessing at, but there's also lots of other possibilities that are less scary. For example, there may be emergency clauses that only get triggered if certain things happen, and they're just not triggered. So you're kind of caught in this middle situation where a team is unable to sign, but yet the people that would be able to sign aren't able to sign yet due to whatever policies that they have. So
okay, so how does all this relate to your work and Bitcoin SV, do you think?
Well, we obviously, aside from working there before, we had launched a Float SV partner exchange with OKEx.
Right, so just for background, you have your Float SV wallet, and it is somehow a kind of subset of OKEx, or what is that relationship?
Float SV is a white label exchange with OKEx, and so therefore we launched it just to market to more of a BSV user base, and it does little different things like instant deposits and things like that of BSV. But the custody of the assets is commingled or pooled with OKEx. So that had a direct relationship, impact on the Float user base. And so as a result, because of the uniqueness of the situation, and what I mean is usually exchanges are just running fine and they're processing withdrawals fine, so that's fine. Or they are hacked and they may be shut down or paused or suspended entirely. In this case, the exchange is actually running. It's actually able to trade, etc. But yet, because you can't withdraw, there appears to be already emerging markets that allows a user with funds on the exchange to swap with a user who has funds outside the exchange who want to take over that position and that account. And obviously kind of get funds out of the exchange that way. It's not really getting out. It's more like just swapping positions and taking a credit risk of the exchange.
So people are coming up with creative solutions.
Yes.
And so if I have some money stuck in the exchange, I can offer that as sort of security to somebody for an asset that they will give me. Is that basically what we're talking about here?
Yeah, correctly. And because it's already crypto assets, it's usually like to like. So it's more like if you have a BTC asset on the exchange, then we'll give you a BTC asset outside the exchange, but maybe at a discount. And I think currently it's traded, very volatile because people don't really they have all kinds of different views on what's going on. So I think it's traded anywhere between like 80% of the total value to maybe as high as 95% of the total value. And right there, it presented a couple interesting scenarios. So if you were just to let the market go wild and just have individuals almost like how people sell tickets outside the stadium, like, hey, I got 2 seats, do you want to go in? That can be highly abused or have fraud in the case where, imagine you sent the coins to them first and then they never gave you the coins in the exchange. So then you need an escrow service, you need different things. And that's when we were already knee deep in the tokenization of Bitcoin assets on top of Bitcoin. So we decided to issue a OKBSV token.
Okay, so let's just take this very slowly here. You as RelayX are doing this, right?
Correct.
And so just talk me through how your token works. Who's paying for it? Who's buying it? Who's selling it?
So right now, however many Bitcoins you have just normally inside a non-custodial wallet, like a money button or hand cash, that's very clear, right? And that's like visible on the ledger. But the number of funds that you have inside the exchange, that is not clear. That's in a centralized account. So what we did first was we just said, let's tokenize those assets, specifically here, Bitcoin SV inside OKEx. So doing that on a one-to-one basis. So what that means is right now, the funds are sitting with different users' accounts inside OKEx, right? So instead of that, if you would like to have a representative token for your asset, funds are sent to a central account inside OKEx. And the amount backing that is one-to-one issued for an OKBSV. Now that the token exists on the Bitcoin ledger, you can at least see that there's that much of the tokens. It's similar to like stable coins. It used to be dollars in a bank account, then you had a one-to-one representation, and now you have things like USDT or USDC, and those can sit on a blockchain and move as a token. What's interesting here is now that you have OKBSV, you will have a market for people who want to, maybe people who are not even OK's users, who don't even have an account on OK, but just think, I think everything will be fine. That's a financial product I would like to purchase. So they might be a natural buyer. Because effectively, if withdrawals are resumed, anytime soon, then you are just making an extra 10 to 20% on your BSV assets by changing from BSV for OKBSV, which later for additional amounts of OKBSV, and then you can get the actual coins out when the exchange resumes.
So you have created a fund inside OKEx, and if I, as a small investor, want to get my BSV out, I transfer it to your fund inside OKEx, and then you issue me with a token that I'm free to do what I like with of 80% or whatever the percentage is of the full value. Is that right?
Well, no, the token you get is one-to-one with the funds that you sent inside OK. But whether you can turn that OK BSV token into 80% of real BSV outside is up to the market. It might be trading at 85 or 87 or 95 or etc.
I see. But how are you making money out of this, or are you just doing this out of the goodness of your heart?
Well, number one, it's like if you redeem the OKBSV back for the assets on the exchange, it's one-to-one on the way to issue. It's 1 to 995, so 99.5% on the redemption. So it's a 50 basis point charge there. And then we also run an OTC service to try and help people match, once it's been tokenized, to help people find buyers and sellers and potentially make a small spread on those trades. But we, as issuing an open token, those tokens are free to be negotiated upon and dealt with outside of our control.
How revolutionary is this in terms of BSV and its use of tokens?
Well, I think just a month ago we had the first token, which was the USDC stablecoin, which is a little bit more vanilla and etc. So it's a pretty sharp increase in sophistication, just given that that was less than a month ago that we're here coming out with OKBSV. It wasn't part of the plan, but we had already decided that we were, if you think about it, we had the Ethereum chain-backed USDC on BSV. This is just another variance of that with like an OK account-backed token on running on BSV. And you can imagine that as a way to port over eventually all of the assets on Ethereum and have them run on BSV instead. And I can give you reasons for why they will run better on BSV. But so it's kind of I didn't expect the situation to come, but it does a lot of things for us, checks a lot of boxes. It helps us give some assurance that there are options for float users, right, that have funds inside the exchange. I feel terrible. It's a very unfortunate situation. With the coronavirus, I'm unable to visit China at the moment either. So I'm sitting outside of China. And so, there might be reasons other people want to get out of OKCoin, and it has nothing to do with default risk. So some people imagine you're saving up for a wedding or you're saving up to buy a house or something, and you need to close on the house next week. Even if you are absolutely certain that everything is fine, which is exactly what the exchange is saying, you might have a liquidity issue and you just want to have some funds outside the exchange now. So this option I think is critical, but it also just coincidentally demonstrates sort of our new token wallet, a RelayX token wallet, and also our use of the Run protocol on Bitcoin SV.
And if people who have money at OKEx don't have a float wallet, can they just open one up straight away and take advantage of this tokenization?
Yeah, it works. It works across OKEx and float. So if they have any kind of account at OK right now, they can do this. But it only accepts BSV for now. So if you have other assets on OK, this doesn't work for you.
But within OKEx, you could change to BSV, couldn't you?
Yes, that's right. Yeah.
But so how complicated was it for you to make this possible? And I mean, technically, and then in terms of financial risk and making sure that you were covered, how difficult was this to do?
Yeah, so again, I don't know what this confluence of events means, but we were kind of fortunate in that obviously we had just minted USDC. So that was more complicated the first time around. So the token side was just issuing another token, right? And then on the OK side, the interesting thing is as a service, we were crediting users with another product for the last year and a half called Relay Instant, which because OK had like a 50 confirmation waiting period for people who wanted to deposit BSV to trade, we had already been doing sort of these internal transfers that allowed users to have an advanced credit on their deposits of BSV. So think about it, on the way in, you gave the BSV to us, we gave you BSV that's already parked in the exchange, that was very much safe from a zero confirmation perspective, from the exchange's perspective, and we were sending for the last year and a half those coins to your account. So given that, we had this kind of technical infrastructure set up on the OK side of things that we could leverage here in this situation again. So if someone were to do it from scratch, obviously the hardest part, I would say, in building any product on Bitcoin is figuring out the scheme, figuring out the most elegant solution that you can do. Once you have that figured out, I think the technical part will sort itself out.
Great. So do you have any idea yet how many people will be sort of taking this up and taking advantage of it?
Yeah, well, we obviously have an open dialogue with the OK team as well. So obviously, we need to make sure we're abiding by all the rules that they have. So we've done a few trades so far. I would imagine that it wouldn't be that big because, first of all, BSV as a percentage of assets on the OK exchange is not that high. There are also other channels that are competing with this channel. So there are things that you can do. I know OK themselves enabled a peer market inside China for RMB to assets inside the exchange. That's done by the exchange themselves. That's running over Tether. So Tether will be the base asset to transfer. And then Ethereum, a group in Ethereum issued a similar type structure, but for BTC in the form of wrapped BTCs and allowing you to have a trading market from OK's BTCs to the outside Ethereum BTC. So there's several different tracks that's going on in parallel. Therefore, I would be surprised if we had more than like sort of 100 users, but it's a great option to have.
And in your dealings and your communications with the OKEx people, are they welcoming of people doing this kind of thing, or does it just sort of make them look bad?
Well, I think initially they were hesitant about such a situation, but I certainly don't know how long the situation will last. It could be anywhere in days, weeks, or months, or who knows? I don't know. But obviously, there's lots of anti-customers that they have that want to know what are my options. And if you don't officially sanction a few channels or kind of work in partnership, it could get really like nasty. I know one project made up some rumor of, hey, if you move this coin specifically inside the exchange, we'll give you something else outside the exchange. And that made that coin pop 30% in like a matter of 10 minutes because everyone thought, let me get that because that's my exit route. And with this unique situation where we're making a BSV token for the OK assets of BSV, it means that at least the BSV holders don't need to sell, or in this case called dump, their BSV in the exchange to go to a more liquid coin to move it out. So I think I won't speak for the exchange, but from their perspective, once they kind of buy into the idea that there needs to be some kind of market channel to hold over this next few, however long it takes, then you would actually want those channels to be across several coins so that there's not a huge congregation towards one coin that makes the market prices more volatile. And I think that's reflective of what they've done so far.
And so let's look at this as an example, almost a pilot for tokenization on BSV. What lessons can we draw and what can it be an example of for the things that might come along in the future?
Well, we think about this was a distress situation or kind of a stressful situation where it wasn't like OK had approached us to voluntarily tokenize. But that a lot of use cases for tokenization range anywhere from a farmer who wants to tokenize his crop, a hedge fund who wants to tokenize their portfolio. What that means is those traditional assets, whether it's a farmland or fruits or produce or buildings or financial assets, those don't run on any common ledger. And so those value is very hard to transfer. You'd have to take the funds out to dollars and then wire money to somewhere else and things like this to move these assets. So there's going to be a massive shift to tokenize every asset in the world onto a common ledger. Today, people think that that ledger is going to be Ethereum, but you have seen that even just in DeFi, just with barely 1 million active users, right, on MetaMask, this popular Ethereum wallet, the chain has clocked to the point of $5 to $10 transaction fees. So now if you put yourself in the position of let's say just you go back to the OK example of a holder who happens to have like $9 left on the exchange. He was just trading $9, okay? If they went the Ethereum route to off-ramp out of OK, it would take them probably 3 transactions, like tokenize the assets, that's one transaction, then receive that asset, another transaction, switch that asset back to like a normal version of that asset, like trade it at 80%, something else, then move that to their other wallet. That's 3 transactions. If each transaction costs $3, your $9 of principal is already gone. So what's the point of even exiting out? So now it's like, irregardless of what your view is on BTC or what's your view on Ethereum, even if you think Craig Wright is a complete scam, right? If you're just a user with $9 on the exchange, your only pathway out is via the Bitcoin SV blockchain, right? And so that represents the idea that there are market forces. If you can find use cases for tokens that require very little capital, then they have to operate on the Bitcoin SV chain. And I think that's a huge opportunity for everyone involved.
So the whole messaging about scaling and low fees and stuff is really proved by your example here.
Yeah, and there'll be probably many, many better examples very soon.
And how easy is it going to be for BSV wallets to trade different tokens, do you think? Are there issues there that need to be looked at?
Yeah, I think so. I think there needs to be a common standard for tokens. But usually standards are formed one of two ways, either through market forces or through a committee. And I've never seen a committee come up with standards. It's always in the market. And so right now there's a lot of different protocols out there. There's Run, there's Tokenize, there's STAS, there's ELAS, and I must be missing several of them. I believe there's also Otilla of Matterpool just came out with another standard called like Super Asset.
And these are all incompatible with each other, are they?
These are all incompatible with each other. They all have their arguments for why one is better than the other, because some of them run on layer 1, which is the base layer. Some of them run on layer 0. Some of them run as a layer 2. And I think because right now you don't see any token project really launch other than what we have launched, then there's this academic, theoretical, intellectual debate about which token protocol scales best for financial institutions, which token protocol, like in that respect, the token protocol has a better like kind of compliance layer to it. That's what they mean when they say financial institutions. There's the which protocol happens to be more anonymous for the privacy of the users, and then other things like which protocol can scale the most. Like it might be the most raw. Often the ones that can scale the most are the ones that are most raw in terms of whether it's commercially viable today. It's more like the science, the math means that yes, a future of 20 trillion tokens can exist on that protocol on the blockchain. But along the way, as you've seen from the price performance of Bitcoin SV and the user base stagnation, you have to have one of these protocols kind of be started. And we can migrate to other protocols 5-10 years down the line. That's fine. And so when we took a look as Relay at the different protocols, it wasn't that we liked the Run protocol the most, in terms of it didn't check every single box, but it definitely checked enough boxes that made us feel like that was a protocol that you can run tokens on, no pun intended, right now. And I think it would take the other wallets to reach the same conclusion, so that we would love for our users to be able to send from Relay over Paymail to a Handcash wallet tokens, and vice versa, and across all the ecosystem.
Because the ideal is that we end up with any number of different kinds of tokens on BSV,
Sure.
but you can flip them from one wallet to another just as easily as you can BSV itself.
That's right. And we actually are going to add any protocol that gets market adoption. And we certainly hope the other wallets think this way too. And so if we're able to prove Run adoption, then they should add Run token protocol as well. There should not be this forcing of this particular protocol is the best, we should all use that. That should not be the way.
When you talk about adding a protocol, I thought the whole thing we were trying to do was to reduce it to just one that everyone's going to agree on, not just adding more and more.
That won't happen. That won't happen because there's just going to be, that might happen, but there's always going to be some other bits and pieces that run on some other token protocol. Just because I don't think any of these protocols will take market dominance that quickly. And then the solution to all of that is there might be some wrapping standards, like wrapping the tokens on top of the Bitcoin blockchain into another standard that could be interoperable.
But if you keep on adding different ones and everyone can just add as many as they want, I don't see what it is that you're complaining about, really.
They have, so far, the other wallets have added 0. That's my point.
Right, but that's their problem, isn't it? I mean, if you've got better things and better protocols that work, then you've got an advantage.
Well, no, it's not that much of an advantage, right? Because the whole idea of a Bitcoin blockchain that is open is so that better services can take some of our users away from us, and we can take users away from worse services, so that there's choice for the user.
Right.
You telling me that I'm the only wallet that supports tokens, you think that makes me happy? It doesn't, because obviously within Bitcoin we have a small market share, a decent market share, maybe 10 to 20% of the Bitcoin users have a Relay wallet. Now you are not allowing the other users of the other 80% to have access to tokens. That makes token issuance much less interesting for other projects. So if you're like a gaming app and you want to have in-app tokens, right? So crypto fights, as you've interviewed before, they run on the Run protocol also. They obviously can accept BSV as payments from almost every wallet. But if they issued in-game tokens, those in-game tokens can only be displayed and rendered inside Relay. So all of a sudden, that's making their CEO, David Case, think, well, is now the time to do tokens because I don't want to cut off all the other users. So the sooner we get to kind of a market consensus, a market dominance, the more tokenization happens. And I think you need tokens for Bitcoin to take its next evolution.
Right. I would challenge you, though, on the idea that there aren't industries where technical standards are agreed by committees and that's useful. I mean, I think if you just look at electricity protocols or stuff like that, there are sort of, in a way, arbitrary decisions that are made by committees that if everyone agrees on, it's in everybody's interest rather than ending up with incompatible protocols.
Well, correct. I think there will be, I think that will happen after. It'll be a reactive technical standard committee. It'll be reacting to what the market is doing and then just playing some window dressing and kind of wrapping it up kind of a thing to officialize something. I don't think you need to start there. You can kind of end there and use that to educate the market or stamp it approval, whatever you think that is. But if you look at the other token projects on other blockchains, I don't think it was formed from this type of committee. Now, obviously, there were like proposals in Ethereum. That's how ERC20 came to be named. This is like the Ethereum request for comments, I believe it stands for. So that's just some developer just putting it out there. People started using it. And if you think about what Unwriter has done, right? A lot of this industry is using Unwriter stuff, whether it's Bitcoin. You think about what Dean has put out which is Metalink. These things have not really required a meeting of the minds, so to speak. So I think the market moves very fast, and the market will determine, what protocol wins.
So just looking ahead, what do you see as the other opportunities for protocols that are, I mean, in a way, having a financial one, like you're talking about in relation to OKEx, is kind of easy to understand. But do you really believe that there are going to be tokens that will represent things that are just non-financial assets and that they will be able to be traded?
Absolutely. I think if your child is born and the birth certificate is not on the blockchain as a token, then it'll be like you lost a kid or something.
But
like
then what does the trading of a birth certificate consist of then? What would be the point of that?
Well, no, you have started your identity at birth on the Bitcoin blockchain. And then as your child grows and learns how to walk, and that first step will be tokenized. Everything that they credentialize, everything they learn will be up on the blockchain. So now each individual is, anytime they're starting a business or something, they can say, I would like to launch, even like in a Streamati video, right? You can imagine you launch the Streamati video. Today, everyone's applauding us for having revenue share, like being able to sell copies of the Streamati video. But the next version is, my video itself is a token. You can invest in that token. And has limited number of issuance, limited number of views. Each token represents a certain view. Like, there are things that you can do to bake Bitcoin much deeper into these applications beyond just payments.
But who is going to want to invest in somebody's birth certificate apart from the person themselves?
I just mean not a certificate, but I mean like your life starts there. Your life starts right now because we have been using non-Bitcoin things for our whole life, right. And then suddenly.
But isn't what you're talking about there just storing of data, important data on the blockchain?
Sure, but I might want to sell that data. I might want to do different things that I want to build a different community that.
Right.
My store, my coffee shop, everything can issue gift cards. We already have a partner friend that issued a run tokenized gift card for small businesses. That's AnyPay.
I guess, there are many situations where one is asked to add one's date of birth. And you could say,
Let's get off the birth subject. I was making more of an analogy of like a kid at 2 will have 100 tokens.
No, but I've thought of a good way. I've thought of a way of making sense of what you said, which is that.
Oh, okay, go ahead.
Which is that.
I thought I gave a bad example and led us down the wrong path.
No, I mean, there are many situations in which one's asked for one's date of birth on a form or something, and you can say for 0.0001 of a Satoshi or whatever, you can have access to it. Here's the link.
Sure. Yeah. Yeah.
So let's just end by returning to the OKEx situation. Well, let's draw some conclusions from that. What are the lessons do you think you can draw from your experience on that, and where that's going to go?
Well, I don't know for this specific situation how it will play out. Obviously, I hope for everyone that a resolution is found quickly and everyone's funds are safe. That's my bias. But I think it marks a potential watershed moment in terms of the adoption of on-chain trading versus sort of off-chain trading. There was already a lot of buildup of that kind of interest this summer with the adoption of decentralized finance protocols on Ethereum. This will likely kickstart that even more. So you'll see more people hold their funds in a non-custodial wallet and only trading when they need to instead of parking their funds on exchanges. So, and then you'll see more tokenization. Because think about it, even for that asset, right now exchanges serve two roles, right? Exchanges serves both as a custodianship role and they serve as an exchange of matching orders. You can see a world in the future where these exchanges look more like custodians of assets because somehow you don't want to hold the fund yourself. But then once these coins and these assets are tokenized and free to live on Bitcoin SV, then any number of people can make trading interfaces on top. So now instead of having one company in one country build products for the entire world, you now have 100 different products that share the same trading kind of pool, and that can appeal to a wide range of user bases. So that it's kind of like the theme of data sharing on Bitcoin SV that could be applied to the entire exchange marketplace. I know there's projects, including ourselves, who are working on that kind of next evolution of exchanges. This probably puts into the mainstream attention why that's important.
One final thought is that there's been quite a lot of bad publicity about exchanges and problems with exchanges. You've come up with a solution that helps people overcome those worries, because even when an exchange gets into a pretty extreme situation, like saying nobody can withdraw anything, it turns out you haven't lost your money. There are ways of still getting access to it and trading it.
Yeah, you get a decent haircut on your funds, I guess, if you pull it out now.
But it's better than nothing.
Yes, I can't take credit too much for that, but over the 5 or 6 years, there's been a number of creative entrepreneurs who have done all kinds of different things. For the listener, there's the Bitfinex hack in 2016, where they tokenized the losses and they gave users a percentage of the ongoing, once the exchange resumed, the ongoing profits, and shared that with the people who took a haircut on the initial hack, and that was able to return itself back to normal. So I think this just shows you, this goes back to right now. Tokens are something you go to in a time of necessity. Like you got hacked, you have to have tokens. Not a lot of people start with tokens. Most people start with, I want to run a normal business. If my normal business gets disrupted, then I'll go the tokenization route. I believe in the future, in the next 1 or 2 years, you'll see companies start with tokens. And that's where they will develop their user base, develop their incentive scheme. Something very simple. Twetch has obviously started doing /features to raise funds for new additions to Twetch. And then they have also started sharing some of the fee income from those feature launches when people buy it, whether it's direct messaging or they're buying certain features within Twetch, dark mode, etc. Well, how do I know that they are going to be good to their word, that they will actually give me a slice of the income that they generate from the features that I funded? Well, very obviously, tokenizing something like that would give me a trusted representation of my percentage. And that's very much fits into the legal realm of accountability and transparency. And so you can see, even for not just a company's stock to be tokenized, companies' sub-features tokenized. So then you can just imagine billions of tokens in existence out there.
That's brilliant. Thank you so much, Jack. It's been really interesting to hear about the OKEx situation, and it's been a really great way of opening up the conversation about tokens as well. So I really appreciate it. Thank you.
Thank you, Charles.
Thanks very much to Jack Liu. Next week, I'll be talking to the journalist Eileen Brown about how BSV fits into the wider tech picture and why she gets trolled so badly when she writes about it. Please join me, Charles Miller, next week for another CoinGeek conversation.